understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Happy Friday. I'm back with another episode of the Tech Behind FinTech. Really excited to be here today. I have my special guest, joining us all the way from Germany. So this is an international Tech Behind FinTech episode. So it's really gonna be exciting to explore today's topic. Welcome to the show, Joe.
Hey, Nambi, thanks for having me. Hello from Frankfurt.
Nice. Joe is the CEO of startuprad.io. So let's do some housekeeping, and I'm going to introduce Joe officially, and we'll dive into it. We are streaming live from LinkedIn and YouTube. Also, feel free to comment, and if you have questions, and we'll bring your questions to the forefront and get them answered. Today's topic: why U.S. FinTechs fail in Europe, the Expansion Playbook. Joe Meninger is the founder and CEO of startuprad.io, one of Europe's leading English language startup media platforms, and a top global podcast for startup and tech insights from the German-speaking region. Through interviews with 1,000 plus founders, investors, and executives, Joe specializes in translating the DACH, Germany, Austria, and Switzerland innovation ecosystem for U.S. audiences, helping American VCs, corporates, and tech companies understand and connect with high-growth European startups before they hit the mainstream. His work has opened doors for cross-Atlantic partnerships, market entry, and deal flow, making startuprad.io a trusted bridge between European founders and the U.S. innovation economy. Joe's mission is simple: service the most promising technologies, founders, and trends from Europe, and help global companies spot opportunities early before you see entrepreneurs anywhere else. Welcome to the show, Joe.
Thank you. Pleasure to be here.
So, really interesting. This is a lot of stuff that I think companies take for granted in general, right? You have this really good fintech, good startup, everything's going well in the US, and people are leveraging, using your services, your customers love you. So you're like, okay, why don't I just expand to a international? Customers love me here, they're gonna love me there too. And we just keep growing. What's wrong with that assumption, Joe?
There are a lot of differences from culture, regulation to taxes, just as a few examples. Would I tell my US-based clients, usually if you think in terms of marketing like a big bell in the US, you pull out a sledgehammer, you hammer it one time, it rings, everything's fine. But here in Germany, you have a much smaller hammer, and you need to keep hammering. You need to keep building trust. It doesn't do to do like one marketing blast and then you're all in. You're all doing well, and everything will turn out well. You have to slowly build up the trust. Also, same thing for the regulators, for example. And don't ever get me started on the taxes here in Germany.
So interesting, right? Because, one would say trust is a universal problem, right? Like when you have customers, it's really important in order to expand your community, they have to trust you. What do you say the difference is in terms of the trust model in Germany versus the US?
I always do simplification here. Of course, that doesn't apply to everybody in the US or in Germany. But basically speaking, in the US, you have a big mountain of trust up front, and then you deduct. In Germany, it's the other way around. You have a small amount of trust, and you build it up over time through performance, repetition, delivering good service, and stuff like that. That's also something a lot of companies have gotten wrong over time. Cultural fit, market dynamics, regulation. What comes to mind is, for example, Casper, the mattresses. Never worked the market entry here. Very famous example, Walmart. Also, Citibank didn't do too well here in Germany. Where you can contrast, for example, JP Morgan is about to build a direct bank here in Germany for retail customers. That's what in the blog media right now. But they've been here decades building up knowledge, uh, hiring local talent, and basically building the whole thing up here locally in order for it to make it work. You just cannot simply take a system that has worked somewhere else and just put it into another country without big adjustments, especially in something like finance, fintech, and expect it to work. Especially here in Germany, people don't necessarily shift their main banking, their main checking account frequently. For example, I do have 2 bank accounts, and I have them for more than 2 decades already. So that's a really different thing, and if an online bank comes around, I think, maybe I'll try it, maybe I won't, and then when I'm at the stage of thinking about trying it, it's already gone.
So, let's explore that. I like the fact that you brought up JP Morgan and Citibank, right? Two major financial institutions, globally recognized. I'm not as familiar with both of their expansions in Germany, so please shed some light on it. You mentioned that JP Morgan their plan seems to be so far working where Citibank's plan failed. And why is that? You also mentioned that, JP, they've been there for 2 decades. Is that correct? Or did I get that? Okay.
More
More,
longer.
right, longer. So can we contrast the two to help us understand, and that's a really good use case, by the way. What are some of the mistakes that Citibank made versus JP Morgan?
I do believe you cannot really contrast this because Citibank bought entities here in Germany and it was more than a decade ago. So they did a rebrand. They joined some networks there and they already had existing clients. JP Morgan, on the other hand, especially with the reported retail venture that they're building up, maybe launching it this year. They are doing something different. They have people here on the ground. They do have a lot of experience. They are especially present as an investment bank here in Germany. So they do have local talent. They do have local knowledge. They do have an understanding of local taxes, regulation, and so on and so forth. So they use this and build up a online bank in a way that would work culturally with the people here because they've seen what works and what doesn't. I'm very, very confident they do have a few smart analysts tracking what the leading online banks in B2C are currently doing. Think, for example, the broker Trade Republic. Think, for example, the retail bank N26, and so on and so forth. So there's quite a few examples of things that are going well, but every business model, every entity does have a downside. And it's very important to understand where the breaking points are, what doesn't work, and also what works. And then best to copy all the things that do work.
That's really interesting. So, what would you say is the first signal that a U.S. expansion strategy is failing? What's the first sign?
Oh, usually if it looks good on an Excel sheet. You're smiling. Believe me, I've been working for more than a decade as a management consultant in capital markets. If it looks good on an Excel sheet, it doesn't survive contact with reality.
So it's interesting you say that, right? So one of my side quests outside of fintech and technology is real estate, right? I've been doing it in it for like more than like 2 decades. And what we do now is we buy distressed single family homes, we turn them around and we rent them long term, right?
Mhm.
And one of the rules that I always say, it's a lot easier to erase something on paper, an architectural plan. A wall shouldn't be there. Okay, we're gonna remove the bathroom than it is to break down sheetrock or move a toilet from one end to another or rearrange the kitchen after it's already in there.
Mhm.
With that being said, and your analogy on the Excel, right? Because some might say, right, wow, this looks good on paper. This is the first step of the overview, and it looks like it could work. What are they leaving out?
Usually in an Excel model, there go a lot of stated and non-stated assumptions. And you have to allow yourself to iterate, to test. I think that's something everybody has learned in the last decade from we do a plan once, then we hire like 2 dozen consultants. We realize that and it will work to, we start with a handful of employees. We have this idea, we iterate around it, we try what is working, what is not working, and then eventually do big launch when we do have a concept, a business model, a USP that is really working.
Right, so that's back to like the startup culture of a minimal viable product, right?
Yep.
So let's create something that we can test on a small scale with real customers, real people, and let's get feedback, right? As you mentioned, and let's iterate that feedback into our product and build small and then keep growing from there. Does that sound accurate?
Yes, sounds pretty good. And if you want to speed up this building, you can take on VC, and then you have the traditional startup game.
Okay. So are you saying as part of the first signal for expansion, that part for companies that fail, that's what's missing?
I would say you have to allot enough time to iterate, to adjust. Um, in the past, basically, you send over a lot of people, like in the 80s, in the 90s, they founded an entity and everything was going slow from there, like 1, 2, 3 years before you had a branch, a subsidiary in a different country, like in the US. Now you can already send somebody over, for example, with a big co-working space, and send somebody there, get a local connection, and do the first adjustment. But what not ne- what cannot be replaced is having local talent, having somebody who knows how your or your potential US customers tick to run marketing, to have somebody who is in Germany. You want you would like to have customers there, build up a subsidiary. You need somebody who understands how those customers are ticking. Don't get me wrong. You don't necessarily need somebody here on the ground, but you do need somebody who's not too far away from the action and who understands how your customers are ticking, and you need to iterate that. You need to work with a few assumptions, clearly stated assumptions, and then start to iterate. Do it fast, do it on a small scale, and when you have something that works, you can start working with it. You go big. But as I said, it's not the same growth trajectory that you can achieve here in Germany as you can, for example, in the US.
Explain that growth trajectory because you mentioned before, right? That and I want to understand the culture in this respect.
Mhm.
It takes time, really, and I think it all comes back to the trust factor, right? So, what is that cultural difference that you see? Because you spent some time in the US as well. What's the big cultural difference in in that you're describing for so companies can understand?
Um, if there would be just one cultural difference, I do believe that would be a very short interview and there would be a lot of very successful market entries. So it really depends on where you're working with companies. Take, for example, a B2C startup finance. You have to convince your potential customers. They have to trust you enough to trust you with some money. Regulation, of course, helps there a lot, but you also have to deal before that with the BaFin, the German version of the SEC. If you do a B2B company, fintech startup here in Germany, you also have to understand the entrepreneurs here, and you always have to segment. I think that's completely obvious to everybody who has already run a business. You cannot say, uh, I was I'm a mentor for a few startups, and I tell them I start yelling at you if you give me our customers are college educated, higher income people between 30 and 50 because everybody's targeting them. There's nothing that makes them special. You have to find your very niche, how your business model fits into the life, into the needs of your customers. It's like think about it like a puzzle, like a Lego piece that is missing that could fit in here.
It's interesting, right? Um, I remember working at an investment platform. I worked at an organization, public company, and we had like an open floor concept. So the different teams got to interact, technology, marketing, and so forth. And one of my intros to marketing at the time, I was straight technology, release management. And one of the things that I saw that was really, really impressive, and it opened my eyes to this because I did research and used a similar technique for other ventures that I started. They had this avatar, right? We could call the avatar Bob, right? Just random, right? We call him Bob for just the point of this story. And the thing with Bob was, although the platform, um, was an online trading platform, they knew everything about Bob's life, right? What time he woke up, what he read, did he work out, did he go drop his kids at school? They just knew. I mean, so it was so into Bob's life that some of the things you would wonder, this has nothing to do with financial trading. This has nothing to do with that. But they were just so into understanding what Bob does as soon as he wakes up, where he lives, what kind of car he drives, does he commute to work, does he take the train in, is he married, does he have children? And they created this avatar to understand. And that avatar, Bob, represented, right, that customer. So they really tried to understand it. And what you just said just sounds so familiar to that way of thinking, from my experience. What are your thoughts?
You have to find your own Bob. It's let me try to keep a little bit in this frame of mind. So basically, you go to every country, you start to understand your Bob. It's like the iteration, the research. I was talking about somebody who knows how your customers are ticking. Depends on how deep you need to go, and then you have to determine if there are enough of those Bobs around in the respective country to make it a viable business. Makes sense to me.
Okay. So You know, let's get into for like fintechs, like regulation, right? Obviously, if you're targeting customers and so forth, you're gonna be regulated, in the US, UK, Germany. Is there anything that makes the regulation process in Germany inherently more difficult per se, or are there things that stand out that companies should know about?
Regulation is always difficult, especially if you translate it from a case law country to statutory law country. Um, Given that you also have a different culture here at BaFin, um, you need to be prepared. And don't get me wrong, BaFin today is something completely different than it was 20 years ago. They are more modern. They do have more young, agile people in there. They also work in a much more customer friendly way. Customer here speaking about the fintechs, but they still have to keep to the regulations they have been given. And it may be that they are a little bit more precise on this or on that, especially given what has been happening in the past here in Germany in terms of Wirecard, for example, and everything's. I do believe there was some leeway for fintech startup, but that has gotten smaller with this case.
Can you describe the case you're referring to, please?
Wirecard was one of the largest frauds here in Germany. Basically, it was a payment company that made it into DAX, and it turned out they did report a lot of cash balances that did not exist. So they had to file for insolvency. It was a big fraud case, and so on and so forth. So they really scammed with a lot of different techniques, the regulators, the auditors, and so on and so forth. Basically, it's a still ongoing case. So the court cases are still in process out there. Plus, there is a periodical here in Germany, Der Spiegel, the Mirror, and they did a lot of investigative journalism. And for example, they figured out one of the former executives of this company actually is now hiding in Russia. It appears he had some connections to the Russian intelligence service and stuff like this. So there was like a whole big story about that, and it's not over yet. But ever since this happened, I do believe BaFin is doing what they are set up to do to protect the customers, to protect the clients of the institutions. Because keep in mind, in Germany, it's not simply a bank. For the people, it's an institution. For example, one of the accounts that I have, it was something set up for me at the thrift organization, Sparkasse, here in Germany when I was still a baby. So that's how long I have already this connection to this bank. And there are a lot of people who are still banking with those thrift organizations, those cooperative organizations, and so on and so forth. So it's a whole thing. If you want to compete with them, you have to understand the market, the structure. And it's, of course, very different from what you find in the US. The big banks out there who work on a retail basis, think Deutsche Bank, Commerzbank, and so on and so forth. They are only making up a small share of the overall retail market. Stuff like this is something. Keep in mind, you have to have a lot of bobs, a lot of people who are willing to shift away from this institution or take you on as a second or third account. They do have checking account.
I have some questions around that, but we have
Yep, sure.
one of our friends from the show, Kevin Garland. He brings up a point. Once, let me read it, and then we can address it. He says, "Joe, you bring up a great point around the history of Wirecard. Post mortem, don't you find it ironic that one of the largest fintech and financial service fraud scams occurred directly under the nose of the most highly regulated market in the EU? This didn't happen in Malta or Lux or these other edge markets where many fintechs like to go, given their lower barrier to licensing entry." What are your thoughts?
Um, I, I'm not too sure if this could not have happened in other countries as well. The special thing about a Wirecard, I think, if they ever, when they started with their fraudulent scheme, I think there was simply no way back. They always got bigger and bigger and got bigger tricks and bigger scams because there was just simply no way back. So they had to grow. They had to become bigger. Yes, it's a little bit ironic that this happened, but I do believe there are always cases that slip through regulation.
That's the thing, right? It's almost you see this a lot in these type of regulatory in general, right? Someone gets through the cracks, something happens, and then things it's a common business thing. It's lessons learned, and everyone's learned a lesson, and then regulatory new things are put in place to prevent it from happening again. I mean, we see this, time and time again. Kevin, thank
Not
you.
only that, we simply all humans. No human is 100% precise, 100% correct all of the time. We all make mistakes.
Kevin, thank you very much for that point. Greatly appreciate it. Something that I wanted to address because you said it. You said that over here, it's the banks are more of an institution. Like you've had an account, one account that you described since you were a baby, right? Given that statement, then how are new institutions breaking through, right? Like how are they if a lot of people have these historic relationships that go back decades and decades, how would a new fintech or a new provider access those people? Are they targeting just a different generation? Like what are your thoughts on that?
They target different needs. For example, I still have this account there. I also have another checking account, but I also do have for my company an account with an online bank. It used to be Penta. I helped them to get their first investor. Now it's called Konto, but I still run the current accounts of my company there because there was a need. It is a great product and it had a great fit for me. So for them, I was above. You're smiling. I like that one.
That's funny. It's a fun fact. So I get these like facts before these interviews, just and I like to throw them out. I have a statement that says over 70% of European B2B buyers prioritize long-term stability over rapid innovation. What are your thoughts on that statement?
That actually goes into like at the very beginning of this interview, I was talking about the sledgehammer versus the small hammer. Over time, you build it up slower, but it keeps working. This relationship keeps building up. This relationship keeps working. Germans do prefer reliability. But on the other hand, I was once interviewing an Australian lady who set up a startup here in Germany. She said, yes, the setup is expensive. It takes long. But also the compliance costs are higher. But if you have ever set it up, it runs like clockwork. There's not a lot of bitching around, not a lot of new instructions. If you set it up once, your compliance, your taxes, and never ever mess with Finanzamt here in Germany. It's a German version of IRS. If you ever have set it up properly, it runs like clockwork. You don't need to give any thoughts to that. You do your tax declaration monthly. They charge it from your account. That's it. Hands off. No need to do anything. If you have a good relationship with the tax advisor, they'll do a lot of this stuff for you. You need to sign off. That's it. There's not
So
a lot of. Yep. Go ahead.
No, so it sounds like, right, when getting entry into this market from a compliance and just handling the overhead of doing business, if you invest upfront in getting the process right, understanding everything that you need in terms of taxes, compliance, regulate, if you get that process right from the beginning, it's clockwork moving forward. That's what it sounds like.
Yeah, a lot of it. As always, there are changes. But if you have one set up a problem, set up a proper system, the additional energy you have to invest is smaller than something. Yeah, it's easy to set up in the US, and then you have to do that, and you have to do this, and then you need this filing and this. In Germany, you have to do a lot of paperwork up front. But if they do have all the statement, everything they need, you likely don't hear anything back from Finanzamt for like 5 years.
Oh, wow.
Don't get me wrong, they charge their taxes and they get their taxes. But besides that, there's not a lot of conversation you need to have with them.
You mentioned during the conversation, I just want to get a better understanding and correct me because I want to make sure I heard it right. You said there's a difference between a statutory country with laws. You mentioned a term, and I want you to break that down for us.
It's basically in the US you have case law. You have to discuss like every case, everything. In Germany, for example, in commercial relations, you look into the Handelsgesetzbuch HGB. There's a law, there's usually a paragraph or something like that, and it's regulated. You don't need to refer everything to compliance, to a lawyer, and so on and so forth. So there is less friction in that. You don't need to, for example, when I was working in the US versus in Germany, as a consultant in the US, you have to discuss like every special case with the client. It was like 500, 1,000 questions. Here in Germany, you ask, how do you interpret this section of the law? Okay, we set it up like this, and 500 questions disappear. But
and the difference
just
between those
part
is
of
case law is case law versus what?
Statutory law.
Interesting. Okay, I'm not as familiar with that. I need to look that up. So
it's also just a small part of my experience, and of course there will be cases where it's completely different. But for me, for what I did, that was the case.
All right. No, that's interesting. Another question. So, what are some of the mistakes that you saw U.S. founders make when they're trying to build credibility?
I don't have necessarily an example of credibility here, but I was talking to a very large US company, privately held, and they were planning on a market entry, and they did like all the stuff, went through all the hoops and loops here in Germany and did the market entry, but they didn't observe the market enough. For example, what happened last year, our former chancellor called a snap election. They got voted out. We got the new coalition government. And during this time, they tried to do a market entry, but nobody was moving. Everybody was waiting for politics. How is the new government treating a business? What are they doing? And so on and so forth. So you also need to be aware of the market. That's just one example of things that I've seen that went completely wrong. And then they basically pulled the plug and said, oh yeah, we're going to do something completely different, instead of keep working at it, keep building up trust, keep building up a potential customer base. And then when the new government was in place, when the new investments were agreed upon, it started, and basically they would have been in a very good position to start with the business. Then they just didn't have the the ability to stay long enough, to wait for results long enough.
You know what? That's an interesting use case and an interesting lesson. So what it sounds like, right? They were doing everything right. And some of the hurdles that they faced during market entry had nothing to do with their effort or their strategy. It literally had to do with the outside factors in government that they just had to literally hold tight for and just wait for that to be situated so they can go, okay, here is the new government in place. Here are some of the rules that's going to be established, and this is how we proceed. But because of that, it was almost like a freeze from a market perspective, right?
You could basically see the people standing still in business, waiting for the results of the snap election, what the new government will be doing, because it was already clear they want to do something very different in economic policy. They want to do more investments, special funds investments, and so on and so forth. And the chancellor who called the snap election, it was also kind of clear that he would lose the election. So everybody was basically standing still, like frozen in place and waiting for the results and what the policy would look like 6 months down the road. The company in question and a lot of other companies trying to enter the German market at this time had the same feeling, but they did react differently. So keep in mind that you also have to be aware of the framework. What's also quite interesting is, for example, just one example to adjust to the culture is in Germany, between, let's say, the 23rd of December and January 6th, you barely reach anybody. They won't pick up the phone. They won't reply to emails. Everything is locked down. So everybody is spending time with family, vacationing, skiing, and so on and so forth. So you don't reach people, and you shouldn't make plans to reach people there. Just a very, very simple example. And there are a few holidays in the spring. There's a holiday in fall. That's something I try to tell to educate my listeners to. We always talk about the upcoming holidays. What's the usual customs there? Not necessarily you dress like this or do you dress like that, but that's how people will do it. They will take time off. They'll spend time with their family. They'll do this. Don't expect somebody to pick up a phone. Don't plan critical meetings during that time. And those people who are working, believe me, they don't want to be disturbed. What we call in Germany between the years, between Christmas and January 6th, it's basically they all have to close their annual account. They have to do their tax filings and so on and so forth. They do have more than enough work ready for them. So they have the work cut out. Just a simple example of that.
You know what? But that's a really important point in terms of culture that can easily be missed by a non-local company trying to gain access into this region, right? Because end of the year, the end of the year, it's seeming to be more universally accepted that people are taking a little bit light that year. I mean, you see it in different industries. It's like, okay, you might come in, but it's a lighter load, right? Especially if you're not a contractor per se. If you're a full an FTE, you see things slowing down. The exact dates, so I like that you brought that up because one can be, especially the holiday that you mentioned during the fall. What's the fall holiday and how long does that last for?
It's Unity Day here in Germany. It's on October 3rd, and usually when you do have it, some working day, some weekday, people would take time off around this day. This year it's a Saturday, so you're good. Don't worry about it. But a lot of people will use this as an anchor to do vacation, to make some fall holidays and so on. Plus, should I tell you a secret? One of the most successful things we ever put out there for marketers has been our advertising calendar. So we put together everything you need to know about the culture, the vacation habits in Germany. It's very, very much driven by the school holidays here in Germany. We don't have a very long summer break. We have 6 weeks. And then you always do have like in the fall, in the spring, around Easter, you have a vacation, around Christmas, and so on and so forth. And we have 16 different states here in Germany, and it's federally planned that they don't have all time off at the same time. There will be a few weeks overlap here and there, but basically it's stretched out. And we do have a calendar out there that helps people to understand this and find spots where it's very good to start a campaign and where it's very bad to start a campaign. And that was one of the most successful things we did. We had a PDF, we sent it to some international clients, and then we got back like 20, 30 emails of people thanking me for this calendar. I have never heard even of the company they're working for. It went crazy in marketer circle who were interested in Germany. So we decided to put it out as a blog. That's kind of what we're trying to do as Startup Radio, help the people to understand this. For example, Easter is not very big in the US, but around here in Germany, you have almost in every state 1 or 2 weeks of vacation.
Wow.
And during this time, you have to see that one or both parents are at home to take care of the kids. So a lot of people would take time off. You see, that's kind of the logic that is working around. But if you also like Startup Radio, we realized that a lot of our listeners are taking this time to catch up on past interviews. So we do experience some spikes there.
No, man, that's these are all interesting points, and I think it ties into what you said earlier, the importance of establishing local people and partners that you work with. And let's talk about that, like how partnerships play into the success of a company with an expansion plan into Germany.
And that is quite difficult to talk about it in a very like general way. But what usually helps if you do have a local partner, somebody who could help you with local information, may it be taxes, may it be vacation, school holidays, and so on and so forth. That usually helps. So what I personally would do if I would be planning a market expansion to Germany, just send somebody over. There's a lot of co-working chains out there where you have international memberships, and you can just send somebody to different places here in Germany. Because keep in mind, Germany is a federal state. There is a lot of different clusters, a lot of different importance cities for different industries. For example, if you think automotive, Stuttgart would be important. If you think tech, Berlin, of course, as a startup hub is important. Also, Munich is important, but also places like Darmstadt are increasingly important. If you think insurance, you would rather look to Cologne and Düsseldorf. Or if you're into logistics and aviation, you should look at Hamburg because there's a big Airbus factory. It's the third largest aviation hub in the world behind Seattle and Toulouse. That's something you have to keep in mind. It's not always the best decision to go straight to hub X or Y. You have to determine what's best for my industry, what's best for me. If you, for example, think about like wholesale banking, capital markets, also Frankfurt may be a good place to be. Or if you do have very special customers, there are different places. For example, Düsseldorf is famous in Germany because there's a lot of headquarters of Japanese companies here. Around here where I live, a lot of Korean companies are headquartered.
This is really good information. I mean, that's and I think some of the things we touched upon during this episode is enlightening, because obviously we're talking specifically about Germany, but some of the lessons to be learned could apply to expansion plans, in other places as well. That's
Mhm.
why I like this. I mean, establishing local partnerships. Something is simple. It's simple but yet obvious. Understanding the local holidays and the customs, right? Understanding what's going on with the politics. Understand how does that impact business, and interacting and partnering with people that do, so you can use that for your market expansion plan. It's what happens sometimes in life, that I see this a lot.
Mhm.
Everything is obvious after the fact. Like, you're trying to do something, and when someone's like, you're like, oh man, that was obvious. Why didn't I think about that? It's so simple, but it's so needed and having that plan. Uh, are there additional insights? We're about to close the show, that you would like to leave companies, like good lessons, good nuggets, that we can close on.
Yes, visibility, for example, in your marketing works differently in Europe. US expansion is often like performance marketing first. Where Europe, there's credibility first. Trust is built through partnerships, ecosystem adjacency, long form authority. Europe rewards presence and not the campaigns. Um, the people should keep in mind Germany doesn't have one single hub. There are different hubs for different things you want to do. Look into what you're trying to do. And also, you should pick a beachhead. It should not be like Europe. I know the US love to aggregate all the European countries into one, but you should look into a dedicated country, become familiar with this country, and then scale.
Now, these are all good lessons and an excellent way to close the show. So, one of the things that we do for our guest is, I'm going to get off the stage and give you the opportunity to talk about your company, how people can find you, and so forth. So I'll do
That's
that
very
right now.
simple. That's very simple. Hi, I'm Joe. I'm the founder and host of Startuprate.io. You can go to startuprate.io and learn more. We do have, for example, an annual fintech review that was just aired in December for 2025. We have a lot of interesting people there. And also, if you're interested in advertising with us, or if you're looking into, thank you, if you're looking into do a market entry, feel free to reach out. Joe at startuprate.io.
Thank you, Joe, for that. Definitely appreciate that. Startup Rad.io is on the screen. It'll be on the screen for ever, perpetuity, as part of this video now. Also, for our listeners, we have a newsletter that we put out in Tech Behind FinTech. So if you go to Tech Behind FinTech /subscribe, you can subscribe to our newsletter and know what's going, the latest in Tech Behind FinTech and what is going on. Definitely encourage you to do that. The show is sponsored by Sweating Equity. Like we say before, Tech Behind FinTech, we cover a topic. Sweating Equity will be about the actual guest while working out. So we're working on that particular project. With that said, as I always say, thanks for viewing the show, whether you watch the show live, like my man Kevin Garland, or you're going to watch it tomorrow or next year. We appreciate your viewership, we appreciate your questions, and so forth. Thanks so much. And to my esteemed guest, Joe, great having you. Great insight. I love these episodes when I get to touch base with people across different parts of the world, from the comfort of my own home. I we love it, and it was a pleasure talking and meeting you. And I look forward to keeping in touch.
Pleasure was all mine. Thank you.
All right, guys. Thank you. Have a great weekend. Cheers.
Bye-bye.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.